All right, so a lot of people are wondering, is the short squeeze on MRIN going to continue, or is it going to come plummeting right back down to where it came from? So within this video, what I'm going to be doing is I'm going to be giving you a key price action analysis on when to be long biased, where to enter, where to exit, and I'm also going to be showing you the flip side, when to be short biased, when to enter, when to exit. So in terms of my personal opinion on this stock, I do believe there's still much more room left to run. My price target personally is going to be $39 in early July. And within this video, I'm going to walk you through how you can take advantage of the bulls taking control of this situation. This is a stock that had a massive run in just 1 week. It literally went from, $1.80 all the way to a high of $28 in the pre-market today. So within this video, I'm going to be sharing with you the key levels that, you should be looking to be trading at. So this is really going to help you out in terms of perspective on where the price is going to be heading when certain things happen, such as when the stock hits a certain support level and it turns that into support and bounces, or when a stock hits a certain breakout level and it turns that into support. This is really going to give you a perspective on where the price action is heading and how to take full advantage of those confirmations that I'm going to be sharing with you within this video. So guys, all I ask in return is that you smash that like button for me, and let's get right into the video. So guys, personally, this is going to be a gap fill play for me. There's a gap that has been waiting to fill right here. If you go back to August 5th of 2015, take the closing price. You can see it had a massive gap down the next day. Previous closing price right there, $39.06. Meaning there's a gap that's waiting to fill at $39.06. And one thing you have to understand is, about 60 to 70% of stocks tend to fill their gaps over time. And since it's already heading up there and the volume is there, the momentum is there, the positive news, the catalyst, etc., it is most likely going to end up closing that gap. You could just see throughout history, the stock has had plenty of gaps down. All of the gaps have filled. Gap down right there, gap down right there, gap down right there, gap down right there. All the gaps have filled over time. And it would just be shocking to see, a stock that goes from, we're talking 77 cents all the way to $28. It'd be shocking to see that it just doesn't climb for that move to $39 to fill that gap, because these gaps do tend to fill over time. And if you want to be highly accurate in terms of if a stock is going to fill the gap, one thing you can do is you can check the history. Does it have a history of filling that gap over time? And if it does, then it's most likely going to fill it over time, because history tends to repeat itself, right? So yeah, that's one of my biases around in terms of being long biased from a technical view. Now, let's get into the key levels. How can we take advantage of this gap that is waiting to fill above, right? So there's a gap waiting to fill above at $39. We're trying to ride the momentum. We're trying to ride the wave for that gap to fill. What are the key levels in terms of buying this? So let's start off with dip buying. If this has a gap down tomorrow, so if the stock is red tomorrow, if it opens up lower than it previously closed, it closed at 24.14 today, right? So if this has a gap down, what I would personally do is I would be looking at two levels, but I would most likely just focus on this one level, which is going to be right here at $20.29. There's a gap waiting to fill right here at $20.29. That is what you're going to want to look for. So if this opens up red tomorrow, two levels. This one right here, we're going to call it 21.55. If the stock is still above there and it gets taken out, so you see it come crashing through this line, and then you wait for the bounce, and now it's turning that support level into a new lower high, it's turning into resistance, then it's going to be going all the way down towards $20.30. So say you buy the dip tomorrow at 21.50 and it doesn't hold up. Well, exit for a small, 30, 50-cent loss, and then look to get back in towards here at $20.29. Or you could just wait for that gap to fill. It depends how you want to play it. But with these small losses, it's definitely worth taking the risk, because we're looking at huge upside potential, as this is a swing trade, in my opinion. I think this is going to be a great swing trade. So those are the key levels. $20.29 is the main level I would focus on if it gaps down. So what you're going to want to look for is, say it gaps down tomorrow. If this hits 2029 and you see some bullish candlesticks, you see some trend reversal confirmations, whatever it is you like using for trend reversal confirmations. For me personally, I like to look for volume coming in. I like to look for, bullish pins, bullish candles. The spinning zap right here. I like to look for dojis, and I like to look for confirmation. I like to look for some consolidation, some nice bouncing, some nice breakouts above some lower highs, stuff like that. So if you see that happening down there, it is going to be a buy. Now, let's say it gaps up tomorrow. So if it gaps up tomorrow, two key levels we're going to be focusing on. $25.70, right? So if it pops to this and you see it trading at this level, look for it to turn into support. Once it breaks out, wait for it to have a pullback. If the low of that pullback, if that bounce is higher than that previous resistance level, then it's going to be a buy, right? Now, say it's even higher and you can't get in at the time because it had a gap up, then what you're going to want to look for is pre-market resistance to turn into support. And your pre-market resistance is going to be at 28.24. So same thing. If it's 28.20s, wait for it to break out, wait for the small pullback, and then you're going to be buying into that dip right there once previous resistance is now support, right? Now, in terms of price targets, right? So let's say 25. Okay, let's just quickly go over this. If 2030 turns into a support level, right? Say it falls, goes to 2030, it's going to be heading towards, 24, 25, 25.70 range. Once 25.70 turns into a support level, it's going to be heading towards 28.24. Once 28.24 turns into a, support level, that is when you're going to see things really start to fly. There's really not much resistance. You could even see right here on the daily chart. This acted as a strong resistance level on the daily chart. This 28.50-ish level, right? So the key for this gap to fill is to turn that 28.50 into a support level. Once you see that happen, there's really no resistance up until, like, you could say there's some resistance right here at 34.30, and then also where the gap is going to fill at $39. But there's really no resistance up until like 34.30. And then, if that turns into support, then we see the gap fill. But yeah, that's what I would look for, guys. Those are the key levels. Those are the key confirmations. This is a great gap fill play, in my opinion. And that is what I would focus on. So, in terms of stop losses and in terms of bearish price action, if $20.29 ends up turning into resistance level, so, say this cracks through, pops back up, turns it into a resistance level, then it's going to be heading to right here. Let's go over this real quick. This is why you're going to want to make sure you're going to use some stop losses. So if the inverse were to happen and it cracks 2030, turns it into resistance, it's going to be filling this gap right here at $14.82. I personally don't think it's going to happen, but it sure as hell is possible, considering that, before this hit a new 52-week high, this did go from $18.82 all the way down to $10.20, the next day. So if that were to happen, this would be an even better opportunity as it's going to be more upside potential. So yeah, that's what I look for, if that 29 turns into a resistance level, the next buying opportunity, I would wait until 15.20. Those are the key levels, guys. Take advantage of these dip buying opportunities if it gaps down. And then you could take advantage of these, breakout buying opportunities if it gaps up. It is as simple as that. I would be using stop losses at around 50 cents a share, 75 cents a share. And then in terms of price targets, my price target is going to be sitting towards $39 a share. This is a swing trade. So yeah, great risk to return ratio on that. And there's just huge upside potential, before shit hits the fan and this comes crashing back down to fill these gaps below. I just think that this is going to fill this gap above at $39. It seems pretty obvious to me. The volume's there, the momentum's there, the positive news there. And in terms of if it were to fill this gap, it's going to be like now or never, So yeah, those are my thoughts on it. Those are my opinions on it. We'll see. The volume did dry up a little bit today. However, we did have that nice massive gap up. So we'll see how it reacts. If it's slow, if it's choppy, then it's most likely going to be climbing back towards 2029. And if that cracks, then we're going to have a great opportunity, most likely to be dip buying this towards 1510. So yeah, guys, let me know what you think of this analysis. Let me know, come back to this video and let me know, did you decide to play this based off of the key price action analysis? Focused on dip buying if it gaps down, focus on buying the breakouts when they turn into support if it gaps up. Let me know if you decided to play this. But either way, whether it's dip buying or breakout, if the momentum's there, if the confirmation is there, these should be great opportunities with tight stops. But yeah, let me know how it works out for you guys, and I'll see you in the next one.